Hello and welcome to this June 3rd, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Well, today we're going to try and bounce back from a not-so-great Chart of the Day yesterday, where we featured CXO. Thought maybe resistance would hold on the stock. It did not. The only good thing I can say about that is that by waiting and getting the stock closer to resistance, at least it did cut down on some of the losses. But CXO obviously had a very strong day, and that one wasn't a particularly good candidate. But we move forward. Today we're looking at a little bit more than a $10 billion application software company within the technology sector. This is CA Inc., ticker symbol CA. I'm actually showing a 2-year chart here today. Normally we have 1-year charts or even smaller, and I realize it makes it difficult to see the candlesticks, but I did think it was important to see the long-term chart to see what took place in July of 2009. You can see that we had run up. Well, you can't go all the way back and see, but I believe it was in October or November of 2008 that CA bottomed. We came straight up, got up to almost $19, failed there, and then went sideways for several months before finally in July breaking above the 1880 area, actually closing. I believe this was at $19.12, and then you can see the gap up on very strong volume in July of 2009. The stock ran up, you can see on multiple occasions, got up close to $24, failed, and has now dropped all the way back rather rapidly as the market has pulled back in May. CA has pulled all the way back and tested this gap support area at 1912. Actually, the low on Wednesday was down at 1904, so we went just below this gap support area and then reversed back up, closing at 1991. So very nice reversal off of this gap support area. Notice also as we were putting in lower lows in terms of price, the MACD is actually turned up. So we have a slight long-term positive divergence in play, and the reversal on Wednesday took place on better than average volume. The 6.8 million shares that traded on Wednesday represents about 30% more than the average volume looking back over the last few months at CA. So with the big volume reversal at gap support with the positive divergence, we feel like CA is a good quality reward to risk candidate on the long side. To the downside, what I would look at, you've got the gap support at 1912. You've also got this breakout that occurred around 1875, 1880. So in that range from 1912 down to about 1875, that's a pretty key area of support. So if you were to close back below that area, certainly down by around 1850 or lower, that's an area that I would consider a problem from a long perspective. To the upside, there's going to be several areas of resistance. Obviously, the 20-day moving average, which failed the last time we went up and tested it in mid-May, is going to present the first challenge for the bulls. But with this positive divergence, normally we look for a 50-day test. So I do think that we have a decent chance to go through the 20-day and get back up to the 50. And then ultimately, if we can break back up above the 50, I think it would bring in this $24 price resistance area. So all in all, I think CA is a pretty good candidate risk-reward. We do have, obviously, a very volatile market. It seems like every time we get a little something going on the bulls side, then the bears take over and vice versa. So we do have to be careful, maybe consider keeping positions a little smaller than normal. But overall, looking at this chart, I think this does look like a pretty good long candidate. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestEdCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.